Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's session, let us solve example number 4 of income from business. So this is the example on the screen. This example was asked in university examination October 2018. So the example is: the following is the profit and loss account of Mr. Sanjay for the year ended 31st March 2018. Compute his income from business for the assessment year 2018-2019. So this is the profit and loss account of Mr. Sanjay. Mr. Sanjay is the owner of the business. He has furnished some information in the profit and loss account. So this is the debit side and this is credit side. So in debit side there is opening stock, purchases, wages, repairs of motors, medical expenses, general expenses, motor car, provision for depreciation on motor car 14,000, to advance income tax paid 11,000, to rent 1,46,000, and to profit means net profit for the year is 86,000. Next to the credit side is buy sales 8,50,000, closing stock 30,000, gift from father 27,000, income tax refund 3,000, and both the side is tallied by 9,10,000, and there are some additional information provided. So first information is Sanjay carries on his business from rental premises, half of which is used as his residence. So Mr. Sanjay carries his business from rental premises. So half of the premises is used for business and half of the premises is used for his own residence. Next is the use of car was 3/4 for the business and 1/4 for personal use. Next is medical expenses were incurred for the treatment of Mr. Sanjay. So whatever medical expenses were incurred, it was done for the treatment of Sanjay personally. Next is wages includes rupees 12,500 on account of Sanjay's driver, personal driver. And last is, as per income tax rule, the rate of depreciation on motor car is 15%. So these are some additional information provided along with the profit and loss account. Okay. So now total how many informations are provided? Total 5 information are provided. So first is on rental basis. Okay. So on rent there is adjustment. Then the use of car means on motor car means on repair of motor car there is adjustment. Medical expenses adjustment, and wages also there is adjustment. Okay. So now we have to compute the income from business of Mr. Sanjay. So you have to prepare the format. So give the heading computation of taxable income from business of Mr. Sanjay for the assessment year 2018-2019. Now as per the format, first thing is what? Net profit as per profit and loss account. So this profit and loss account we will get in the P&L account. So to profit for the year, how much it is? 86,000. So write the net profit as per profit and loss account is 86,000. Okay. Now from this net profit we have to add disallowed expenses. Now what are disallowed expenses? Disallowed expenses are those expenses which are not related to the business. This disallowed expenses you will get in the profit and loss account debit side. Okay, you have to identify the disallowed expenses from the debit side of the profit and loss account. So first thing is opening stock, that is 1,15,000. Opening stock is related to business. Okay. Then purchases 1,40,000. Purchase is also related to business. Next is wages. Wages 1,20,000. Wages is also the business expenditure. Okay, but now here on wages there is adjustment. Adjustment number 4. Adjustment number 4 is wages includes rupees 12,500 on account of Sanjay's driver. So wages is total how much? 1,20,000. This wages includes 12,500 for Sanjay's personal driver. So this is not related to business. It is related to what? Personal thing. That is driver. Driver is Sanjay's personal driver. So for that the wages is given 12,500. Now driver is related to what? Motor car. Okay. So now for this fourth adjustment we have to refer to adjustment number 2. So adjustment number 2 is what? The use of car was 3/4 for the business. 3/4 for the business and 1/4 for personal use. So that means from this 12,500 the wages is given to the driver. So the driver has used the car for the business, that is 3/4, and for 1/4 is for personal use. So this 12,500 includes 3/4 of the business and 1/4 of the personal use. So 1/4 from this 12,500 is called as disallowed expenses. 1/4 of 12,500 is called as disallowed expenses. Why? Because it is used for personal use. Okay, the car is used for personal use. So first thing in disallowed expenses, Mr. Sanjay's driver wages. 1/4 is used for personal. That is 1/4 of 12,500. So 1/4 of 12,500 is 12,000 divided by 4, we get 3,125. 3,125. Next is, after wages, next is 2 repairs of motor car, that is 13,000. Now repairs on motor car 13,000. What is the additional information given? Second number, the use of car was 3/4 for the business and 1/4 for personal use. So repairs of motor car total is 13,000. From this 13,000, 3/4 is of personal use, 3/4 is of business, and 1/4 is personal use. So whatever from this 13,000, 1/4 will be called as disallowed expenses. Why? Because it is not related to the business, it is related to personal thing. So second disallowed expenses will be repairs of motor car One-fourth is personal use and 1/4 of 13,000. Repairs of motor car is how much? Total is, repairs of motor car total is 13,000. 1/4 of 13,000, 1/4 of 13,000 is 3,250. Okay. So 13,000 divided by 4, we get 3,250. After repairs of motor car 13,000, next is medical expenses 25,000. Now medical expenses, adjustment number 3. Medical expenses were incurred for treatment of Mr. Sanjay. So medical expenses were incurred for the treatment of personal, that means of Mr. Sanjay. Personally it is treated. So medical expenses is called as disallowed expenses. Why? Because it is related to personal thing. It is not related to business. So medical expenses is 25,000. Medical expenses 25,000. Next is general expenses 1,10,000. General expenses is related to business. Next is motor car 1,30,000. Motor car is what? Capital expenditure. So capital expenditure is nothing but disallowed expenses. So motor car, the entire value of motor car will be called as capital expenditure. Amount of motor car is 1,30,000. After motor car, next is to provision for depreciation on motor car 14,000. So any type of provision, it is called as disallowed expenses. So to provision for depreciation, provision for depreciation on motor car 14,000 is disallowed expenses. After provision of depreciation on motor car, next is to advance income tax paid 11,000. So any type of advance income tax, wealth tax, income tax will be disallowed expenses. Advance income tax paid 11,000. Next is to rent 1,46,000. So on rent there is adjustment, that is adjustment number 1. Sanjay carries on his business from rental premises. So Sanjay is carrying his business on rented premises. From this premises, half of which is used for his own residence. So half of the premises is used for residence. So whatever premises is used for business will not called as disallowed expenses. The premises which is used for his residence, for his own residence, will be called as disallowed expenses. So the total rent is how much? 1,46,000. From 1,46,000, half of the rent belongs to business and half of the rent belongs to his own residence. So the half amount which belongs to the residence will be called as disallowed expenses. That means 50%. So rent is rent for 50% for residence. That means 50% of 1,46,000. 50% of 1,46,000 is 73,000. Okay. Now last is net profit we have taken into the consideration. So all the debit side particulars or items we have taken as some things we have taken as disallowed expenses, means which are not related to the business, we have taken it as disallowed expenses. Now add all this thing: 3,000, 3,125, 3,250, 25,000, 1,30,000, 14,000, 11,000 and 73,000. So total is 2,59,375. Okay, total of all the disallowed expenses is 2,59,375. Now add this in net profit, that means 86,000 plus 2,59,375. Answer we get 3,45,375. Okay, now from this we have to less expenses or losses allowed but not debited to profit and loss account. So the expenses and losses which are allowed as business, and this expenses and losses which are allowed for the business are not shown in the debit side of the profit and loss account. Okay, but it is shown in the debit, in the adjustment. So those expenses or losses we have to deduct. Okay, so in addition to information, last adjustment, that is adjustment number 5, as per income tax rule the rate of depreciation on motor car is 15%. So this you if you check in the debit side of profit and loss account, there is no depreciation. Okay, we cannot take this depreciation. Why? Because this depreciation is not a specific depreciation, it is provision for depreciation. Clear? So this depreciation we have to calculate on motor car 15%. So we have to calculate in the working note, right? Calculation of depreciation on motor car. The amount of motor car is how much? The amount of motor car is 1,30,000. So motor car is 1,30,000. On this 1,30,000 we have to calculate 15% depreciation. So 15% on 1,30,000 we get 19,500. Now from this 19,500, the allowable expenses is how much for the business is 3/4. Okay, 3/4 of motor car is used for the business. So 3/4 is allowed of 19,500. So 3/4 of 19,500 is 14,625. So this is allowable expenses. So depreciation on motor car $14,625. After this, income not taxable as business income but credited to profit and loss account. So we have to identify the income which is not related to business income, still it is shown in the credit side of P&L account. So we have to check the profit and loss account credit side. We have to identify the income which is not related to business and still it is shown in the credit side. So sales is related to business, closing stock is related to business. Next is gift from father, 27,000. Now gift from father is not related to business income, it is related to the personal income. Okay, so that's why, and still see, gift from father is not related to the business and it is shown in the credit side. So those income we have to reduce it from disallowed expenses. Then gift from father, 27,000. Gift from father, 27,000. After gift from father, next is by income tax refund. Now even income tax refund is not business income, 3,000 rupees. So reduce it. Income tax refund, 3,000. Now all the particulars in the credit side we have taken into the consideration. Okay, so now all the additional information is also completed. Now we have to compute the taxable income from the business. Now add all three things like 14,625, 27,000, 3,000. We get 44,000 625. Now this 44,625 we have to less from this amount. So 3,45,375 minus 44,625. Remaining amount is 3,750,000. So 3,750,000 is our taxable income from business. Okay, I hope you have understood this example. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.